September tends to be the worst month.
Sure.
Guess what? We're on pace for the third best month so far this year. What do you make of sort of this change in calendar momentum?
I think the calendar momentum has been pretty depressed since May through the worst 6 months. September, we had a lot of the selling in August, one of the other really bad months of the year. And the fact that September's holding up's not a horrible sign. Doesn't mean that things are off the, that October's going to be great, because it's not necessarily a great month, especially in pre-election years. So it tells me that the market's got some support underneath it, but we still got some things to worry about here.
But that, December through, May period is historically the best.
November through April.
So it feels like we've got a little momentum heading into what is historically the best period for stocks.
I think so, but watch out for October. There is this, month that sits at the beginning of the fourth quarter. You've got the October 31st deadline for mutual funds. On some of our seasonal charts, it shows in this third year that that's a weaker spot. It's the second worst month of pre-election year. So, we've got that self-fulfilling prophecy of October-phobia. There's been lots of crashes. We got a lot of news and noise.
Mutual fund managers, not all of them, but most of them, their fiscal year ends October 31st.
Correct.
So they have to make adjustments. Sometimes they sell winners, they buy losers, whatever it may be.
That impacts October's volatility, arguably.
So what do you see then going forward? Because
I see a test of the support levels. I'm looking at 28.15 in the S&P, which we held back in August. A little below that is 27.25, which was held in June. Those are the technical levels I'm looking at. Fundamentally, GDP's sort of settling down a little bit. We've got sentiment way up. The investors' intelligence bulls are up at 55%. The correction people and the bears people are jumping into the bull camp. So getting a little frothy again here, similar to where we were before the last pullback in earlier in the spring in June. And, it just sets up for a nice little shakeout, and then another rally into year-end.
You see another rally. Because yesterday I hosted the halftime report for Scott, and we had Tobias Levkovich of Citigroup on. They put out their big 2020 call.
More bullish than he usually has been.
They saw, and if you missed it, folks, they saw Dow 30,000 and S&P 3,300. I mean, Tobias Levkovich, he's not one of these guys that's known as this wild bull who's always bullish, but a very bullish call.
It caught our eye yesterday at lunch.
It did. So okay, so thanks for watching, by the way.
You're welcome.
What'd you think of that call?
He's somebody that, we don't necessarily go against, but the fact that somebody who's been very, conservative for a while starts to get a little bullish, maybe he's jumping into that bull bandwagon too, and you've got everybody.
Do you think he's wrong?
No.
Could you see Dow 30,000 within a year or two?
Yes.
Assuming no major recession, no big black swan.
Oh, yeah.
No
I mean, my analysis for the election year with a sitting president running for re-election, regardless of the news and what's going on, is much more bullish than an open field. I mean, we've got a 10.1% average gain in election years when the sitting president's running.
Although I'm not sure that data factors in the impeachment inquiry, because we would have only had that, 3 times?
There were only 1868 Johnson was impeached.
Yeah, and I was reminded by 6 million viewers when I said this incorrectly on the air, 2 things that I said wrong. But Nixon was not impeached.
No,
he was
wisely stepped out before.
He was like, "You're going to be impeached tomorrow. I'm out." I mean, he was, for all intents and purposes, impeached.
It was a respectful move, I think, after all was said and done.
Yeah.
But and the market bottomed a few months before Clinton was impeached in '98 with the long-term capital. So there's few historical precedents with this impeachment thing with respect to the market. So, I look at the cycles, the things that you have more data points. You've got presidents running for re-election, power of incumbency is a bit stronger.